Monday, May 5th, market analysis, Stan Ehrlich. Good morning. So, we start out with stock market indexes and then go to futures. And currently I'm monitoring 4 different stocks. So let's take a look at what we've got this morning. We have a lower opening initially because overnight, yesterday afternoon and evening, and early this morning, the futures had drifted off about for the E-mini 50, which is basically 5 points. But this morning so far, we've got some strength that's come back to almost unchanged, still down about a point, but that's a pretty good rally. Now, the E-mini, Russell, Dow have not gotten overbought, but the QQQ and the NQ, NASDAQ futures, did on Friday. This is the beginning, in my opinion, of the market finding a home for a high, which so far Friday is, but a little bit more rally, again, modest amount, but hopefully fairly sharply, should make the other indexes overbought also. So we're not quite at resistance yet in the E-mini. One more pop up to 58.05-ish, or maybe even 58.40, would not be out of the question. And since we're extremely close to overbought, that will probably do the trick at resistance. And that's one of my favorite combinations that I think would turn down. So I'm still looking for a high, a top coming very soon. I think it's going to be this week. This is Monday. So the 5-minute chart on the 1-minute chart, on the E-mini, just about high and last at the moment. But again, we're not even at the high of Friday, and we're at a little bit of resistance from, the late Friday trading range. Let's see what happens. I think it could roll over and start to head south for a week or 3 or 4, starting very soon, but maybe slightly higher. Can't tell quite yet. Spider, kind of the same story. You've got a gap to close below the market and another gap that's even bigger, a lot lower at around 530. But the first one is around 557-ish. And, gaps are almost always closed. As I say, they're like a black hole in space. They tend to suck the price action back into the gap. So the rally we have had on the Spider has bumped up against a little bit of resistance. Nothing super great, but good. And there is another layer up here as well. So maybe 575. But somewhere between here and 575, I think we're going to start seeing obvious price movements to the downside. Next, 5-minute chart. Sorry again, 1-minute chart on the Spider. SPY not quite closing a down gap from a few hours late trading on Friday, but it's not really a gap on a daily vertical or candlestick chart. No gaps. Below the market, yeah. Next, QQQ, not unchanged yet, still down 1.4-ish. Got overbought on Friday, turned yellow. At this point, any bearish engulfing for the next several days could cause me to find a bearish engulfing ER sell signal like that one, or maybe like that one, probably more like that one there. And that was August of 24, because I am looking for a fairly big break. Gaps that close at lower levels on the QQQ, we've got something around 450. And the 1-minute chart on the QQQ. And let's look at the NASDAQ, which did get overbought on Friday and still touched overbought territory today. So, 2 days now. Could get up a little bit more. Not quite at resistance. Doesn't have to get to resistance. I do like the fact that it's yellow, meaning overbought on my custom relative strength index. So, 1-minute chart on the QQQ doesn't really show anything at the moment that tells me we're about to head south. But I'm very suspicious. Could happen at any point. YM did make a minor new high, but it's the furthest away from being overbought at 70 and a couple of ticks. So it's got 5 more RSI points to rally to get to my overbought 75. That implies more strength for the YM for the moment, maybe the next day or two, and maybe it'll get up to 42,355-ish, which is my next little resistance level at higher prices. Possible, but I am approaching overbought. Now, this one may not get overbought. It seems to be the furthest away, so let's see. And the YM, 1 minute. Got the new highs, pull back, okay. Looks like it's going to try to make new highs again. And what about the Russell? So we are now around unchanged. We are very close to the high of Friday. We are at a resistance area, the top of it. And the low today is at the bottom of the resistance zone. So we're getting trapped momentarily between the top and the bottom here. But if it does pop through, it could rally a fairly significant amount. Now, remember, the Russell RTY, he's got a different personality. Tops out different times, comes down, up different amounts, a lot different historical support resistance zones. So it's not the same animal, but it's good to watch, in my opinion. And you got the 1 minute chart, difficult to make new highs at the moment. Now, bonds. New low for the move down for the last few days. So far, I'm not changing my mind about the broad double bottom potential. Remember, there's a bullish engulfing ER buy signal way back on October of 23. But there's also another one. A little bit higher prices, true, January 14th this year. But I construe that to be as a slightly sloppy-looking double bottom on a long-term basis, year and a half. So this last break got oversold, did not make any lower lows, and then came up to resistance and is now pulling back. I'm not sure, but it looks like we could get stuck between a rock and a hard spot here, bouncing off of 111-ish, 112 maybe, 11 maybe, and we're at 14.5-ish. And then if we have trouble getting through 1722, 117.22, it could get bouncing back and forth. So far, that's my best shot, but I am basically long-term bullish. I have no change of opinion as to whether we're going to see new highs or not, and that would be above at least 122.5 within the next couple, 3-4 months. Next is 10-year notes, the same kind of commentary, but we do have a support level just slightly under today's lows. This double bottom in the 10-year notes with a bullish engulfing ER buy signal, October 23rd, I think. Yeah, of 23. And the low being January 13th of 25. But unfortunately, we didn't get a bullish engulfing. Is, in my opinion, a very nice looking year and a half long double bottom potentially. All we need to do is to basically stay in this price range, not make any lows lower than 109, pretty much flat. And the first time we close above 114 and 11-ish, 12, we better have upside follow through, and it better get through the resistance area and start to trend for months and months to come higher. So I'm waiting for some definitive bullish turn here, but we're not oversold, not even close, and we're just basically getting back to some support. So interest rate futures may have a little bit lower to go short term. Crude collapsed today. And not only that, you'll see the other energies in a moment. A wild day here. We've got a big down gap in crude. Makes me a little suspicious about bad data, but I don't think so because of the way the other charts look. So, downside breakout from support, which held until this morning, all of last week. Now we're oversold. And we've come fairly close to a previous low at 54.40-ish. So we might be making a little double bottom here. Now, we might see slightly lower lows than today's lows so far, and that would just make the double bottom a little bit closer price-wise. But I like the fact that we are oversold and that there's a huge gap above the market to close. I'll have to put a marker in there. I'll do that for you tomorrow. But I think we're about to turn back up. Probably it's one of these cases where the market overdid it. That's what this is looking like at the moment. Same thing goes for heating oil, except heating oil did not quite get below 25, my oversold threshold. Very close. And it almost hit the support level that I've had here for a long, long time. So I'm going to say the same thing about heating oil, with the exception being it's not oversold. So maybe it's going to make a slightly lower low during the week than today's low so far. Otherwise, I think it's close to turning back up. There's a large gap to close. And what about, wow, natural gas is the exact opposite. We got oversold. There's no particular reversal signal. And we gapped up hugely this morning. So coming down to close the gap and then turning back up again would not be a surprise. And I'm looking for a move eventually up to 4.05-ish. But I think we're going to try to close this gap first and then turn up. Okay, gold did make a new low today below Thursday of last week's low, which was a bearish engulfing ER sell signal. Even though it rallied on Friday, here we are. We're making a new low, lower than the signal day low. Good. But we're currently trading near the high of the day, and from what I can tell, we're supposed to be still down a little bit for my little blue sky markers. Apparently, we are up slightly. I don't see any reversal at this point. We're not getting any help from RSI. It's very neutral in the 50 ballpark. So I have to look for lows lower than today's lows probably this week and very soon. I'm expecting to move down to a minimum of 3201, let's call it 3200. And I'm not ruling out by any stretch of the imagination something in the ballpark of 3000. Silver dropped off sharply, staying relatively low. Did make a new low for the last couple of weeks. We did have a bearish engulfing, but it wasn't overbought on Thursday. Now, gold had a bearish engulfing and was overbought within the allotted number of past days on Thursday. So no signal in silver, but the bearish engulfing is what I like to see. Dropped into support, and now we're testing the bottom of the support area all of a sudden, sitting right on it right now, but we did put a crack in it. We made new lows. So if it stops here and slips again, we're breaking out. I'm looking for lower levels, probably down to 31. Going to say also 30.25. Next, platinum did not hold. Good strong rally close on Friday, new highs, looking good, but this this drop in price this morning, although it doesn't have any breakouts to the downside, is making a minor new low for a couple of days, but it could be a new low close for the last couple of weeks all of a sudden. That would be a bit of a surprise. So I have to do a flip-flop here. I have to look for this to test the support area at 949 and very possibly 929. But we do need to close below last week's low, and that would be closing below 951.5. Next, got a big down gap here in copper. So I'm going to put a marker in there for tomorrow. But this tested support on the lows, but that's about it. Not oversold. There's a rally needed to close the small gap that it created this morning. It did rally up into resistance area and get close to overbought, but not quite. That did turn it down, obviously, because of the substantial new lows, lower than last week's lows completely. I got to look for a little bounce to close the gap and then lower lows. Now we're getting into grains, beans, oil, meal, corn, wheat, cattle, hogs, and some stocks. Beans are dropping off a little bit. They've been going sideways, basically, for about 2 to 3 weeks now. And that allows me to say we could have a little bit of a minor downside breakout or an upside breakout of this last 3-week trading range that would be more profound, because that is also going to be making, if it rallies, and I think it's going to, that'll be making new highs for a couple of months after the market came down and I think developed the last shoulder low which was April 4 and 7. So although it could dribble off a little bit more to maybe 1040, yeah, 1037, 1040. I hope that holds. I think it's going to hold and turn back up. I'm looking for that close above 1070 and a perpetuation of an up move. Otherwise, I'm going to have to get a little bit bearish for a short period of time. I don't think we're going to jeopardize this big long-term multi-month head and shoulder bottom. I'm still optimistic about that. Next, dipping down here in soybean oil, making a new low for about a week and a half or so, but it's not staying below the previous lows. I'm also very optimistic about soybean oil. We did break a little support level that held during last week this morning, and we're staying a little bit below that support level, but I don't think that amounts to a lot. All I can say is it could dribble off a little bit more, maybe even down to 45 and a half-ish. I doubt it. I don't think so. But the long-term double shoulder, head and shoulder bottom, developing about February of 24. It's a little over a year in size. Looks to be still good. You do realize we tested the neckline and touched it just about a week and a half ago. So all we have to do is get back to those highs and then push up and break out to the upside. So I'm looking for a turn back up any moment, but it could dribble off a little more. Next, we're looking at meal. Doji, a little lower in the day. Kind of expecting it to hang in here at 294. Don't want it to drop below there, or I'm going to have to look for a test of these lows. Soybean meal is basically the worst of the grains, along with wheat, for potential major long-term bottoms starting to develop. There's just nothing. There's lower lows, lower highs every 2 months, 3 months, 4 months, 6 months. No uptrend. And look at wheat. I'm sorry, corn. Today it's breaking down quite a substantial amount. That's a surprise. But it also is getting oversold today. It's also coming down to test previous lows. Now, I don't really need this break. I didn't want it. But as long as it hangs in there and doesn't get below 450, especially on a closing basis, all I can say is support's holding. We are oversold right now, and I'm looking for a turn back up again at any time. Don't break below 450 or I've got to change things. Next, wheat. A break. We made a slightly higher high, but all of that's gone for the moment. We're not below Friday's lows. We did have last week a bullish engulfing low in wheat, and I talked about the possibility of this low being something dramatically important long term. Now, this break is a little surprise this morning, but it's a good test of whether this commentary about April 30th is going to come true or not. So we're down close to the low of Friday, which is close to the low of Thursday. If it holds right in here and then starts to get above today's high, the next few days or at any time, but soon, I'm going to be even more optimistic about my comments. You can go back and listen to them on April 30th. We're looking at cattle. Overbought second day. Big rally up. Looks like a blow off top, frankly. It's in progress. They're very hard to predict how high is high, how much further up it's going to go. But because of the nature of the way these blow off tops work, we're very close to the top time-wise. It doesn't last very long, but it can shoot up a bunch in a very short period of time. Let's see. I'm looking for a top. Next, hogs. Around unchanged, not doing anything, not violating any rules. We did have a sell signal a week or so ago. That's still good. Past tense it was. It already dropped down quite a bit. This rally doesn't change my mind. I just need to close below 97 and a quarter. And I do want to stay below 101, put it that way, at the most, 101. Today's high, it's just fine with me. Let's go to Shell, First Security. The rally this morning almost closed the gap from last week's Thursday high to Friday's low. Gaps are almost always closed, blah, blah, blah. So the gap is 80% closed, something like that. A little bit more strength, and then we'll see what happens. But remember, I'm looking for a turn down in stock market indexes, so that would probably negatively affect Shell. On the average, well, we'll see. No rally here in Apple. It came down and did finish closing a gap. And that gap was from the high of April 22 to the low on April 23. It closed the gap partially on Friday with a fairly decent bounce back, but still a lower close. Then finished the job. So that's done. I'll just pull this over here a little bit, kind of like that. So it closed the gap. Now what? It's bouncing off support. But there is another little gap. We need to get down to 194. Yeah, 193.80 maybe, but very close, 194-ish. I think we're going to do that, even though it's going to eat through some support on the way. Next, we've got Tesla. Minor new lows. Resistance has stopped this last rally last week. Now we're starting to see some weakness come into this trading range that Tesla seems to be developing. There is a small gap to close in Tesla around 243-ish. I think it's going to do that. And overbought conditions now for the third day in a row on Carvana. So I'm looking for a top. And if it pans out to be a high, and we start to close below, in particular, 229.30, if that happens straight away, or maybe another minor new high, I'm going to call this a head and shoulder top, developing the last shoulder high. And that's exactly what I think is in progress here on Carvana. All right. Let's go take a look at the E-mini real quick. See what changes may have happened while I'm yakking away here. 1 minute chart E-mini. Looks like it went up just a little bit more, maybe, and started to turn back down. But I'm not impressed. There still could be a little bit more strength, but I think we're getting very close to a downturn. You guys have a great day and profitable trading to you.